Welcome, everyone. Thank you for joining us today. We are going to have an honest conversation about AI in underwriting, what's actually working, where the limits are, and what teams should be paying attention to right now. My name is Katerina Monastyrska. I lead insurance technology solutions at DICEUS, and I spent most of my time working with insurers and MGAs on exactly these questions. I'm joined by two colleagues who approach these from different but very complementary angles. Let me hand it over for quick intros. Diana, over to you, please.
Hi, thank you, Kate. I'm Diana Mirteva. I'm a product owner of the Underwriting Workbench. I'm responsible for how the product actually evolves, what gets built, in what order, and why. That means I'm constantly working through the gap between what AI can do technically and what makes sense inside a real underwriting operations and business processes.
Yeah, thank you very much. Alina, please.
Hi everyone, I'm Alina Demchenko. I'm business consultant in DICEUS, and my role focuses on bridging the gap between what underwriting teams need day to day and how the platform is configured to deliver that. Whether it's submission intake, workflows, or decision rules, broker collaboration. I spend a lot of time talking to underwriters to understand where their current process breaks down before we even start introducing any technology.
Perfect combination of perspectives. So let's start with the big picture. Before we talk about what AI can do, I want to ground it. When we talk to underwriters today, a lot of them are skeptical. They have heard AI will transform underwriting for 5+ years, and their day still starts with reviewing emails and building spreadsheets. Alina, is that a fair picture?
Completely fair. There is a real gap between what gets announced at conferences dedicated to AI and digital transformation and what underwriters actually experience day to day. And the reality is that most teams still spend about 40% of their time on tasks completely not related to risk assessment, like chasing documents, entering and structuring incoming data, clarifying incomplete submissions, or manually pulling data from public registries and so on. And actually, that's the baseline we are working against.
Yeah. So hasn't AI fixed that yet?
Not broadly. We definitely see some progress, and certain careers are getting real value out of optimizing some specific steps in their workflow. But if talking about wholesale transformation, it remains a challenge. Yeah. And the real bottleneck isn't the AI model itself, it's data quality, change management, and fragmented underwriting systems that prevent underwriters from feeding clean data into the model in the first place.
Yeah, and in general, that's the part that often gets kind of glossed over in DIMUS. The AI actually trained on clean structured data. The real world sends you, some PDFs that someone scanned some way, sideways, or some data is kind of not visible clearly, and emails with lots of attachments in different formats, and some spreadsheets that's been reformatted six times, 10 times, or just the real life, it's a little bit different. And the first challenge is actually getting structured, usable inputs before the model actually does anything interesting.
So let's talk about where AI is actually adding value today, given those constraints. Diana, what do you think?
So, I would say that the first area where we see consistent, measurable results is submission triage. Not the decision itself, of course, but sorting. So like in real life, sometimes most people actually, not sometimes, but like nowadays, like as today in June, most people give all those boring tasks, routine tasks to AI. No one's go to Google and check all the websites with the data if they want to find an answer to their question. Even in Google itself, AI just give you this response. So it's kind of similar approach in here. An underwriter, yeah, gets dozens of submissions a day. So it's a huge routine. Sometimes, of course, it depends on the company itself, like on
Line
the
of
business. Yeah. But what AI can do here, it can read those incoming submissions, extract the key data, score them against your appetite, and give you actually a ranked list. So this job is done by AI, and it reduces the time of underwriter, yeah, spending on those routines. So which ones are worth your time, which ones you can decline quickly, which ones need more information before you can even assess them. The part works well, and teams that implement it are seeing triage time drop significantly, sometimes 60 to 70% on the step alone. Alina, do you agree on this one?
Yeah, I completely agree with that. And the core value here is focus, actually, because skilled underwriters can handle complex risks, but if they are spending 2 hours a day just sorting through an inbox, that's 2 hours lost for critical judgment calls. And triage automation gives that time back. Plus, from a practical standpoint, it prevents underwriters from missing out on profitable business simply because a good risk sat in the queue for too long.
Yeah, that's true. And the next layer is risk scoring, of course. Not just sorting, but evaluating here. You have a submission and that AI scores it against your underwriting guidelines, the historical conversion data, and etc. Appetite match. Does this fit what you write? Vulnerability based on premium side, broker relationship, response speed. How often do you bind these kind of risks? So these signals exist in your data and AI can actually surface them.
Yeah, and this is different from traditional rules engines that underwriters have worked with for years, right?
Well, yes and no. Rules engines, they are explicit, and of course, we're using them, and I believe we will be using them for a long time when we don't need AI. So, what is actually the difference? I can find patterns in historical outcomes that no one explicitly programmed. So, those rules, they're just kind of, let's say, hard coded. Yeah, those rules are defined and they're there and they work as usual and it's cool. But the risk it assesses might be with AI, I mean, might be this type of account in this region submitted by this broker at this time of year has a 70% bite rate. And that combination of factors would never appear in hand-coded rulebook, of course, because that is a little bit different approach in here. And the flip side is that the model can also learn bad patterns if your historical data has bias. Yeah.
Nice. Yeah, Alina, what's your opinion on that?
Yeah, that's a very valid concern because if your historical book of business leaned heavily toward specific geographies or industries for reasons completely unrelated to risk quality, like legacy broker relationships or historical appetite or so on, then the AI model will carry those patterns forward. And this is why exactly we need underwriters to be actively involved in validating what the model is learning rather than just, blindly accepting its output without validation.
Yeah, that's totally true. And another thing where AI is actually helping. It not just can help, but it's actually helping. It's a quote generation. So for standard low complexity risks, AI can take the structured submission data, apply your pricing models, and generate a quote automatically. Of course, underwriter reviews and approves rather than building actually it from scratch, what actually takes time. And from time to time, as we said, like routine can be simplified with AI. And that's actually where you get the 50% improvement in quote turnaround, and you start to see in better implementations.
Yeah, and I'd like to add that the keyword here is standard, because when a risk calls for deep underwriting judgment, like complex account or some unusual coverage combinations or absolutely new risk categories, then the straight-through pricing automation is not the goal. Instead, I think technology should give underwriters, a head start. So it pulls the data, calculate the initial technical rate, and flags potential anomalies and key areas that need attention. And from there, definitely the human expert should take over and make the call.
Oh, yeah. And let's be direct about where AI doesn't work well yet, or where the limits are real and underwriters should know them going in. Diana, what can you tell us about the limits?
Yeah, there are some limits, and the first one and the crucial one actually is that the model is only as good as the data you train it on. So in underwriting, historical data is often incomplete, inconsistently structured, or covers a period that doesn't reflect current market conditions, let's say like 2 years ago, or world changes even a month ago. Sometimes it's late, depending on the cases, of course. If your data is seen for certain segments, the model will be unreliable for those segments and might not know it. And anyway, it learns. And that's why we need also underwriter approval in some cases, and it will learn on the fresh, newly data.
Yeah, and I would like also to add and admit that AI doesn't handle completely new and specific risk categories well. Because when a risk falls outside historical training data, human judgment is irreplaceable. A good example that comes to my mind is cyber insurance. The exposures and loss patterns change so constantly that historical data from just a few years ago won't help you price this risk today. And this is why actually underwriters' experience and market knowledge are everything.
Yeah, that's definitely true. And another kind of a limit that we have, it's explainability, and it's still a real issue in production. So generally, you can build a model that is accurate, but why did the model score this risk low? Needs to have an answer that an underwriter can engage with, not just a probability score. They need to know the answers, because for regulators, it's important. They care about this. Same as underwriters care about this, because if they can't understand the reasoning, they can't override it intelligently when they need to. So no explainability from AI kind of blinds underwriters here. So it's one of the limits.
Yeah, and actually there is another massive limit that is often underestimated. It's a change management, because AI tools launched without underwriter buy-in are bound to fail, actually. And I've seen it. The system flags something, the underwriters ignore it, and those alerts quickly become just, like a background noise, and sooner or later, trust is lost. And to make AI work, you must involve underwriters from day one, and the teams that make it work are the ones that involve underwriters in defining what the system should flag, why it should flag before the platform ever goes live.
Yeah. So it's not just a technology question, right?
Exactly. In reality, it's maybe 30% technology and about 70% people, process, and data quality, actually. Yeah, and the truth is that the technology is usually the easiest part to handle.
Right, yeah. And given all of that, the real wins and real limits, what does a well-implemented AI-assisted underwriting operation look like? What's the pattern you see in teams that are making it work, Diana?
Yeah, it's like few things consistently. So first, they don't try to automate everything at once. They pick one high friction step, usually intake or triage, get the working and trusted, and then they can expand. The teams that try to do everything simultaneously rarely get anything into production because it takes time, takes effort, and as Alina mentioned, those are people who also have to adapt and help AI actually.
Yeah. And second, I believe it's underwriters are kept in the loop during the design phase. And it's not just keeping them informed, because they actually need to be actively involved in defining what the scoring model should care about, setting the thresholds, and actually deciding what triggers a human review. Because when underwriters help build the rules, they naturally trust the output of the AI model.
Yeah, true. But to clarify, the AI makes a recommendation and the underwriter makes a decision. That's the model that holds up over time. When you try to remove the underwriter from the decision entirely, you either take on regulatory risk or you take on portfolio risk you didn't intend to.
Yeah, and from a practical standpoint, having a robust audit trails matter much more than people may think initially, actually. And every single decision must be traceable to know what data the model processed, the exact score it generated, how the underwriter acted on it, and what is the most important, why they deviated if they did. And this is not just to satisfy regulators. It's for your own progress over time, because if you can't analyze why a decision went the way they did, you can't improve and optimize your process.
And get better, right? So, and while preparing for the webinar, we gathered 3 of the most frequently asked questions we hear from underwriters, and we'll try to uncover them now. If you also have questions, please feel free to send them to our emails. We will get back to you with more detailed answers, and you can see emails in the chat, so please feel free to email us. So Diana, could you please answer the first question? How much historical data does a carrier need before AI scoring is actually reliable?
Well, it depends on what you are scoring and how granular you need to be. So for broad appetite matching, a few thousand historical submissions can get you started. For segment-specific vulnerability scoring, you generally want at least a few years of outcome data, bind rates, losses, and renewal patterns. The honest answer is that many carriers don't have it in clean enough form to use it directly. Yeah, that's often the first project as data consolidation and structuring before the model even starts.
And Alina, the next question is for you. Should underwriters be worried about AI replacing their roles?
Our answer is directly no. No, and not anytime soon, and not probably in the way people may think. I think the tasks getting squeezed are the purely administrative ones. These things like manual data entry or sorting documents or basic intake. But the strategic side, like complex risk assessment, broker relationship management, and pricing for non-standard accounts, that definitely remains irreplaceable. And ultimately, AI just frees up underwriters, to spend more time on high-value work that truly demands their expertise.
Yeah. And the last question is for you, Diana. What's the single biggest mistake you see in AI underwriting implementations?
Oh, well, skipping the data audit, of course, because teams get excited about the model and start building even before they understand the state of their own data. Then they discover that their historical submissions are, I don't know, like in 3 different formats. Half the outcome of data is missing, and the policy records don't link clearly to the submissions. And those discovers generally cost 6 months. So definitely do the data audit first.
Yeah, thank you. Thank you very much, ladies. So we are at time. Let me ask each of you for one thing you want the audience to walk away with. Alina, over to you, please.
Yeah, thank you. So to close, I would like to emphasize that AI doesn't replace human judgment. AI's real power is just to remove the day-to-day friction that holding underwriters back from applying their expertise where it matters most. And this is a true value of automation, and I should say that it's incredibly significant.
Yeah, 100%. And I would say that start with your data, not the model, not the vendor, but your data. If you know what you have and where the gaps are, every other conversation gets much easier.
Yeah. Diana, Alina, thank you very much for sharing your expertise. Really practical conversation, exactly what we were going for. For anyone who wants to dig deeper and learn more about DICEUS AI-powered underwriting workbench, we will share resources in the follow-up email. Would be happy to hear your feedback. Feel free to ask questions directly. And thank you very much, everyone, for joining us today. See you soon. Goodbye.
Thank you, everyone.
you.
Bye-bye.
Bye.